The Schwab US REIT ETF, SCHH, is an exchange-traded fund, ETF, that tracks the performance of the Dow Jones U.S. Select REIT Index. The ETF is managed by Charles Schwab Investment Management, Inc., and it was first launched in 2011. The ETF is designed to provide investors with exposure to the real estate investment trust, REIT, market in the United States. REITs are a type of investment vehicle that allows individual investors to invest in a diversified portfolio of real estate properties. These properties can include office buildings, shopping malls, apartments, hotels, and other types of commercial real estate. REITs generate income for investors through rental income from the properties they own, and they are required to distribute at least 90% of their taxable income to shareholders in the form of dividends. The Dow Jones U.S. Select REIT Index, which the SCHH ETF tracks, is a market capitalization-weighted index that includes publicly traded REITs that are listed on U.S. exchanges. The index is designed to provide a broad representation of the U.S. REIT market, and it is rebalanced quarterly to ensure that it accurately reflects the current state of the market. One of the key benefits of investing in the SCHH ETF is its diversification. By investing in a broad range of REITs, the ETF provides investors with exposure to a variety of different real estate sectors, such as office, retail, and residential. This diversification helps to reduce the overall risk of the investment, as it spreads the risk across different sectors and properties. Additionally, the ETF is managed by a professional team of investment managers, who are responsible for monitoring the portfolio and making adjustments as needed. Another benefit of the SCHH ETF is its low cost. The ETF has a relatively low expense ratio of 0.07%, which is significantly lower than the expense ratios of many actively managed real estate funds. This means that a larger portion of the returns generated by the ETF are returned to investors, rather than being eaten up by fund management fees. The SCHH ETF has performed well over the long term, with returns that have consistently exceeded the returns of the overall stock market. Furthermore, REITs are typically more stable than stocks, and they tend to perform better during times of economic uncertainty. Over the past 10 years, the fund has returned about 9.5% annually, with the returns for the past year, 5 years and 10 years respectively at 23.9%, 17.1% and 9.5% respectively. It's also worth noting that the SCHH ETF pays dividends on a quarterly basis, providing a consistent source of income for investors. The dividends paid have been consistently increasing year on year, but as with any investment, it is important to note that past performance does not guarantee future results. One important thing to keep in mind when considering investing in the SCHH ETF is that it is focused on the U.S. real estate market, which means that its returns may be closely tied to the performance of the U.S. economy. As such, the ETF may be subject to greater volatility than other types of investments, and it may underperform during periods of economic downturn. To summarize, the Schwab US REIT ETF, SCHH, is a solid ETF for investors who are looking for a diversified, low-cost way to gain exposure to the U.S. real estate market. The ETF has performed well over the long term, with returns that have consistently exceeded the returns of the overall stock market. However, it is important to keep in mind that the ETF is focused on the performance of the Dow Jones U.S. Select REIT Index.